Hey, it's Michael Saul, but everybody calls me Tiny, and this video is coiled and ready to go. The downside is not over, so hate away. This is stock market analysis for the week of April 9th, 2018. I'll explain the title of the video in a minute, but first, an announcement. The website is back up and running. You can go to www.attackthemarkets.com, put in your first name and best email address, and get on the free email update list. I'm sending intra-week updates. Last week I wound up sending one, I believe, every day. When the market's kicking up in volatility like that, I like to send more communications. Anyway, you'll be on the list. It's 100% free. You just have to confirm that the email and the name you put in are actually you by going to the email you used and clicking on a link. It's really all self-explanatory, but go to the website, put in your information, and you'll be on the list. Okay? So let's take a look at the market. The market is all coiled up. Here is the S&P 500 being shown here by the SPY, and these dark blue lines show a bigger triangle, but like I've said a couple of videos ago, it's more of a coil because there's not 3 points yet, so whatever you want to call it. But it tried to break down out of it last week, then it came back up. A lot of tariff talk, a lot of trade war talk. President Trump had announced the $50 million in tariff. $50 million. Yeah, if it was that low, it really wouldn't be a blip. $50 billion, which is still, by the way, a blip, but that's another story for another day. Anyway, $50 billion in tariffs, and China retaliated, was saying that they're going to impose their own tariffs. And then Larry Kudlow came on and said, hey, you know what? This isn't even approved yet, so it's right now it's all speculation. And then President Trump came back out and said, "Hey, guess what? We want another. I want another additional $100 billion." So that kind of spooked the market. Job numbers came in worse than expected, but the average for the quarter was still pretty good. Anyway, so Friday the market sold back off. Overall for the week, it was a down week, but not as bad as it was at the low, obviously, on Monday. And you could see here on the S&P, it held that 200-day moving average. Now, the reason for the title of my video is it seems like whenever I talk about us going lower, I get haters. I get comments on the videos, I get emails, and to me, it's just absolutely amazing that people think the market can only go in one direction. Okay, the market actually goes in three directions: up, down, and sideways. Okay, right now we're down a bit and sideways, but I believe that we have lower prices to be seen, and I'm not a bear. I'm just looking for the February lows to be taken out, and for this zone here from 247.47 to 248.85, that little 1.5 point zone or whatever, 1.4 point zone, whatever it is, that to be the minimal target. I don't know if we're going to stop there or not, but I do think we're getting there sooner rather than later. We are now in this mini coil shown by these purple lines, and I believe that this will resolve early in the week, Monday or Tuesday latest. Okay. I also have an update I want to talk about with the current volatility situation. I've been reading up on it and what it looks like it's forecasting for the rest of the year. I'm going to send that update Monday. So what I do is usually if you sign up for the email list, you get an email saying, hey, the new video's up, and then on Sunday, then I send it again Monday morning. This Monday, I'm actually going to send it along with another update I'm not going to have time to talk about in this video. So anyway, I believe it's going to resolve sooner rather than later, as in early this week. What happens if we get into that zone? Is that a buy signal? Well, in and of itself, it's not a buy signal. It's just a zone. Okay, that's the first spot I'm looking at, and then if we break into this zone, I am looking for next support to come down into the 245s. But first things first step at a time. Now, could we go higher first, or could we continue to fill this coil out before breaking? Absolutely. Okay, we don't have to break Monday or Tuesday. It's just that the pattern set up here, all the overlapping bars, the increase in volatility suggests that it's going to come sooner rather than later. Okay, all right. So that's the SPY. The Dow looks similar, holding the 200-day moving average. Dow actually clipped the February low by a little bit, but not by much. The Russell, also in a coil right at the 200-day moving average. I expect that to try the February lows. Mid-cap, similar right here. And the Qs, they're above the 200-day moving average, but they're also in a coil. So is the 200-day moving average important? Absolutely. Now, in and of itself, is it some magical band that is resistance from below and support from above, or is it a self-fulfilling prophecy? Here's the deal. I don't care. All I care is that a lot of people watch it, as in a ton of people, whether it's institutions, whether it's the media who hates technical analysis. Right? Oh, we don't believe in charts. Oh, we're going towards the 200-day moving average. Well, what do you think that is? Right? But anyway, that's, again, another discussion for another video. But anyway, everybody's watching where the 200-day moving average is. And there are computer programs as well as manual traders that use the 200-day moving average to buy off of or to sell when broken. So yeah, it's absolutely important to watch and know where it is at all times. Nothing magic about it. I still want to see a pattern set up. I still want to make sure I can quantify and qualify my risk when I'm taking a trade, either buying it off support or shorting it on the break. But that doesn't mean that you just ignore it. I love people that just poo-poo it and wave their hand and go, oh, that doesn't work. Well, what does doesn't work mean? Anything that can give you an edge, and that's all we're doing as traders is we're trying to stack the odds in our favor. Okay, that's, once again, something else to use as a pivot. Right, to use as a fulcrum for getting into fulcrum, the right word, I don't even know. To use as a pivot or to use as a reason behind a strategy. All right. So anyway, that's what I'm looking at here in the market. I want to, if we do break down here, I want to see what we do at the 200-day moving average. I think it loses it as we head to the 200-day moving average. Here's the semiconductors. They're coiled up as well, looking for them to at least test the 200, if not the February lows. Here's Clad Tanker right on the 200-day moving average. If this gives way, it could be a quick move down to the 96 area. Here's NVIDIA getting caught up in the autonomous driving, the couple steps back with that, with the Tesla, with the autonomous Tesla that killed someone in Arizona. Watch the 200-day moving average down here in the 198s. How about banks? Banks had been acting strong, but they broke down out of their triangle. They're hanging around the 200-day moving average. So if it holds, maybe it'll get a bounce. If not, and it continues down, look for home number 100, 100 that is, not 100, 100. Okay, Bank of America, watch the 200-day moving average. Citigroup's already below it. So Citigroup is actually showing poor relative strength to the rest of the banks. So we want to watch this level right around here, right around the 66 area. There's a gap that fills down at 65.45, and then there's this low down in the 63s we want to watch. How about JP Morgan? Watch the 200-day moving average. How about Northern Trust? Watch the 200-day moving average. How about Zion? Watch the 200-day moving average. And this is all if we continue to pull in. Again, not a bear, just looking for more downside on the short term. How about the broker-dealer? Broker-dealer coiling up here at the 50 and the 20 EMA. Here's Goldman Sachs right above the 200-day moving average. Biotechs. Whoops, got to type in the right symbol there. Biotechs right at the 200-day moving average. They came out of the triangle, failed to test that high. That's a glaring failure sign, and then came down with a comeback trade, I like to call it. But this is right here from September 17 until December 17. This is a nice area of balance right here that we want to watch for potential support. Here's Biogen, looks to be headed lower, and here's Gilead, also coiled up. See if it breaks to the downside here. If it can lose 70, look for a quick move down to the mid-60s, although there is this gap fill right here we have to watch at 67, 69. So we want to see if this, let's draw in the lines here, might as well. Okay, so you have a coil here. The lines aren't going to be perfect, but me being the anal technical analyst that I am will have to adjust. Okay, so here we go. So if this can break down, watch for a gap fill down here at 67, 69. So let's look at our my two favorite, Caterpillar and John Deere. And why are they my favorites? Because while everybody was all rah-rahing around tech, these two stocks just completely went nuts off of this nice 2016 bottom, right? So here's Caterpillar and here's John Deere. And there's talk that they're under pressure because the Chinese imposed tariffs, if they were to happen, is targeting things like soybeans and really targeting middle America. They say it's because that's who voted for Trump. I don't know. I don't know if China is really saying that or that's just the opinion of some. But obviously those that make the machinery that do the farming, right, farm and construction equipment, John Deere and Caterpillar, they can be affected by this. But again, to me it looks like it's just a pullback with the market. So, some people need reasons. Other people like to use reasons to start out and then use the technicals for more. That's more like me. I don't think that the charts are the be-all, end-all. I like to look for reasons as well, but sometimes they just aren't, right? Sometimes they just aren't any, or they're just made up, all right? But John Deere and Caterpillar, Amazon under pressure because, love or hate President Trump. I'm not here to debate politics with you, but everything he's saying about Amazon is not, hot air, right? Or BS, it's a better word, I guess, okay? They do have special consideration with taxes and all that, and that may come to an end. So Amazon under a little bit of pressure here, but not crazy, not like, oh, look at this. I mean, yeah, could it be a short setup if this coil breaks? Right, we have this little mini coil right here, sure. Okay, but it's because of the setup. It's because of the market. It's not just like market isn't ripping and Amazon is, oh, look at Amazon, it's bucking the trend. No. Okay. Apple, watch the 200-day moving average there. Look at Alphabet. So Alphabet is in a coil here. And if this were to break and lose 1,000, this could get down to the 958 area, the top of this range. And then, of course, there's the middle of the range into 942s. Okay, how about the Zucker book, a.k.a. the Facebook? So we mapped out this line when did we map out this? Like a week and a half ago, whatever it is. And notice how we came down, we tested it, came down again and tested it. But if this breaks, look for at least the bottom of this range to be tested, if not this low down here at 139. Okay, bonds. So one of my concerns with the market, even though I am not yet a bear, I'm still looking for just short-term downside, but one of my concerns is that bonds are not taking advantage of the volatility in stocks. And usually there is a flight to safety or flight to quality, whatever you want to call it, into bonds when the market is starting to act a little erratic, right? The volatility picks up, etc. However, we're not seeing that right now. Matter of fact, bonds had sold off. Now, this technically isn't a bear flag because it's all in a big range, but it does look corrective, and it does look like bonds could move down. Now, bonds can move with the market. They don't have to move against it all the time. I'm just a little surprised that we're not seeing that. Gold, kind of similar. Right? Gold isn't showing amazing relative strength here. You can see here it's still in this range. If you look at the miners, they're still under 24. The miners tend to lead the metal. And oil came up, tested the highs, and then rolled back down. So oil's black gold, as it were, isn't in a rush either. There is support. Come on, get away from me here. Where are you? There is support right here where it ended on Friday. So we'll see if that, there we go. We'll see if that holds there. All right, so the recap. I believe that we have short-term downside to be seen sooner rather than later. I'm thinking as soon as Monday. I think that the minimal target is down here in this zone. Doesn't mean it has to stop there, but I am going to be watching that for a minimal target. And from there, all right, a lot of people may say, well, when we get to that zone, it's all clear to buy. And not necessarily, okay? I want to see what kind of pattern sets up there. I want to see if we get a nice reversal. And that can all happen in a day, 2 days, 3 days. The reversals can be quick. We are still in an uptrend. Okay, this is just the biggest correction we've seen, or pullback at least we've seen so far. And we have to really watch what what are the next steps here? And if I'm wrong and we just pop out of here, okay, well, then let's get over 275 and over this dark blue line and continue to rally. But for now, sitting here at the 200-day moving average, trying to punch through, winding up here, I think we're going to get through it, and I think we're going to go to that zone. Questions, tiny@attackthemarkets.com. Don't forget to sign up to the email list to get intra-week updates. I have an update coming Monday morning that you should read if you are interested in my opinion on what I see happening on the short term here into the end, and even expanding into the end of the year. Have a great trading week. I will talk to you via email or in next week's video.